Right now, DataVault AI Inc., trading under the ticker DVLT, is sitting at exactly 1.77 US dollars. The stock is up 17 cents on the day, which translates to a massive 10.63% move to the upside intraday. If you are looking at the chart, you are seeing a classic gap-up scenario where the price opened strong at 1.67 and immediately found buyers willing to push it higher, testing a high of 1.78 just moments ago. The volume is pouring in, and the tape is moving faster than we have seen in weeks. This is not just a standard fluctuation. This is a statement candle being printed right in front of us. The market is waking up to something here, and the aggressive bidding at the 1.70 level suggests that the sellers who are comfortable holding this down at 1.60 are suddenly scrambling to cover. When you see a microcap stock like this move 10% on a Thursday morning, you have to look past the percentage sign and look at the structure. We are trading well above the previous close, and that 1.66 low of the day held like a concrete floor. Most people looking at DVLT right now expect this to be another fleeting AI hype cycle. The expectation is that a company with AI in its name spikes on a press release and then bleeds out for the next 3 weeks. That is the standard playbook for small-cap tech stocks, and frankly, it is a safe assumption 90% of the time. Investors see the double-digit gain and assume it is a liquidity trap designed to catch retail traders chasing momentum. They're waiting for the rug pull, expecting the price to reject 1.80 and crash back down to the 1.50 range by lunch. That is the safe, cynical view that usually keeps you out of trouble in this sector. But the reality here is far more complex and potentially explosive. This is not just about AI buzzwords. This is about a structural market mechanic that might be trapping institutional short sellers in a nightmare scenario. The rally we are seeing today isn't just speculation. It looks like the early stages of a forced covering event driven by a very specific, very aggressive corporate action that DataVault management has taken. The reality is that this company is weaponizing its dividend structure in a way that most of Wall Street did not see coming, and the price action at 1.77 is the sound of the bear thesis cracking under pressure. We are not just watching a stock go up. We are potentially watching a short squeeze engineered through digital asset distribution, and that changes the entire risk profile of this trade. Let's back up and look at the immediate price action on the daily chart, because the story it tells is fascinating. We opened at 1.67, which was already a sign of strength, gapping up from the previous close. Usually when a stock gaps up this much, you see an immediate fade at the open, where profit takers sell the news. We did not see that. Instead, we saw a brief dip to 1.66, barely a penny, and then a sustained march upward to the current 1.77 level. This tells me that demand is absorbing supply instantly. Every time a sell order hits the tape, it is getting eaten up by aggressive bids. The chart is showing a flagging pattern right now near the highs, consolidating energy before a potential breakout over the psychological 1.80 barrier. If we clear 1.80 with volume, the next resistance level is likely the $2 mark, which acts as a massive magnet for traders. The fact that we are holding near the highs of the day rather than retracing is a very bullish signal for the remainder of the session. The broader context for this move comes from a mix of earnings growth and a highly controversial, yet effective strategy regarding dividends. Recently, DataVault reported a massive surge in revenue, up 148% year-over-year in the third quarter. When a company this size starts putting up triple-digit growth numbers, algorithms start to pay attention. But the real juice here, the thing that has the message boards on fire, is the Dream Bold Draft meme coin dividend. I know how that sounds. It sounds like a gimmick, but you have to look at the mechanics of what they are doing. By issuing a dividend in the form of a digital asset on the blockchain, DataVault is creating a huge problem for anyone who is short the stock. If you are short a stock, you are obligated to pay the dividend to the lender of the shares. But if the dividend is a unique digital token that cannot be easily bought on the open market, you cannot pay it. You are stuck. This forces short sellers to close their positions, buy back the stock before the distribution date to avoid defaulting on their obligation. This is what happened with Overstock years ago, and it looks like DataVault is running the same play. This creates a tension in the market that you can feel in the price action. The shorts are arguing that this is a distraction from the financials, claiming that the company is burning cash and that the meme coin is a stunt. They are pointing to the negative margins and the history of dilution. That is their thesis. The company is fundamentally weak, and this crypto stuff is smoke and mirrors. On the other side, you have the bulls, who are looking at that 148% revenue growth and the massive $200 million guidance for 2026, and they are saying the growth is real, and the short squeeze is just the cherry on top. The friction between these two groups is what creates the volatility we are seeing today. The shorts are scared of the dividend delivery failure, the bulls are betting on the squeeze. Comment below right now.
Do you think the meme coin dividend is a brilliant move to stop illegal short selling, or is it a distraction from the core business? I want to hear your take on whether this sets a precedent for other small-cap companies. Speaking of the business, we have to acknowledge the core operations because they are actually growing. DataVault isn't just a shell company. They deal in data monetization and real-world asset tokenization. They recently signed deals to tokenize geothermal assets with Triton Geothermal. This puts them in the Web3 and RWA real-world assets narrative that is gaining traction. The idea is to take physical assets like energy production or real estate and represent them as digital tokens that can be traded. It is a high-concept business model, and execution is everything, but the recent revenue figures suggest that they are actually closing deals. They also have a pending $150 million strategic investment from Skylex Holdings. If that money hits the bank account, it completely changes the balance sheet conversation. It removes the immediate bankruptcy risk that bears love to harp on. However, we have to remain objective and look at the risks. The stock has a 52-week high of 4.10. We're currently trading at 1.77. That means there is a lot of overhead supply. There are investors who bought at $3, $3.50, and $4 who are currently sitting on heavy losses. As the price climbs, these people might look to sell just to get some of their capital back. This creates natural resistance on the chart. We call this bag holder resistance. For DVLT to really fly, it needs enough volume to chew through all those sell orders from frustrated investors who have been holding for months. The 52-week low was 0.20, so if you bought at the bottom, you're sitting pretty, but the long-term chart shows a downtrend that is only just now starting to reverse. Let's talk about the short-selling dynamic in more detail because this is actionable information for you. When you see a stock like DVLT utilizing a crypto dividend, you need to watch the cost-to-borrow fees. This is the interest rate that short sellers pay to borrow shares. In situations like this, that rate can skyrocket to 100%, 200%, or even higher annually. If you have access to a trading terminal or a brokerage that shows this data, check the borrow fee. If it is rising while the stock price is rising, it means the shorts are trapped but refusing to let go. That is a powder keg. Also look for failed to deliver data. If short sellers cannot locate the shares or the dividend tokens, FTDs will pile up and regulators might step in, or the brokerages will force a buy-in, where they automatically buy stock at the market price to close the short position, regardless of the cost. This is what causes those vertical green lines on the chart. Right now, the sentiment on forums like Reddit and X are reaching a fever pitch. Retail investors are viewing this as a battle against market manipulation. They see the negative articles and the short reports as coordinated attacks. Whether that is true or not doesn't matter as much as the belief that it is true. When a community of investors decides to hold the line because they believe they are fighting a corrupt system, it creates a floor for the stock price that valuation models can't explain. We saw this in 2021, and we are seeing echoes of it here with DVLT. The Dream Bull dividend is the rallying cry. But you, as a smart investor, need to separate the emotion from the execution. The Skylex deal is the fundamental key. $150 million is a massive amount of capital for a company with a market cap around $500 million. If that deal falls through or gets blocked by shareholders, the stock could drop hard. If it goes through, it validates the company's valuation and gives them a runway to execute that $200 million revenue plan for 2026. You are trading the probability of that deal closing. We also need to discuss the sector rotation. Money has been moving out of the mega-cap tech stocks and looking for yield in riskier assets. Small caps have been beaten down for 2 years, and 2025 is shaping up to be a year where risk-on behavior returns. DataVault sits at the intersection of AI, crypto, and energy via the geothermal deal. These are 3 hot sectors. By positioning themselves as the data infrastructure for these industries, they make themselves an attractive target for speculation. Looking at the intraday chart again, notice how the price reacts every time it touches the volume-weighted average price. It seems to be using VWAP as support. This is a bullish indicator. It means that the average buyer today is in profit and is defending their position. If the price breaks below VWAP, the momentum might shift. But as long as we stay above it, the bulls are in control. The RSI on the daily time frame is heating up, but isn't completely overbought yet, suggesting there is still room to run before we hit exhaustion. One specific thing to watch out for is the after-hours action. Stocks with this kind of volatility often make their biggest moves when the market is closed and liquidity is low. If you are holding overnight, you are taking on that risk. The news cycle moves fast. A single press release from a short seller or a delay in the dividend distribution could send this tumbling. Conversely, An announcement that the Skylex deal has officially closed could send it to $2.50 in a heartbeat. I also want to address the AI aspect of their business. A lot of companies claim to use AI. DataVault's pitch is that they use AI to value data. In the age of large language models, data is the new oil. Companies need clean, verified data to train their models. DataVault claims to have the technology to verify and structure this data, effectively putting a price tag on information. If they can prove that their tech works at scale and the 148% revenue growth suggests that they might be doing just that, then they're not just a meme stock, they're a legitimate infrastructure play. That is the reality that could exceed the expectation of a pump and dump. If you are looking to enter a trade here, you have to define your risk. Are you chasing the squeeze, or are you investing in the long-term data monetization thesis? If it is the squeeze, you need to be watching the technical levels, 1.80 breakout,